Okay, we'll get started with your experience, your current experience, and how you have come to where you are, and what are your learnings as you came along the way.
Sure. So I think that my background is I think pretty boring, but also has its moments of interesting aspects. And so I kind of spent most of my career prior to 2018 working for a single bank, Sterling National Bank, which is now Webster, and
Yeah.
held a bunch of different roles there. Right. Started out in the mortgage world, and then kind of progressed up to the PMO, and then ran a bunch of IT stuff. But Sterling was really interesting. I think very formative for me because um, number one, I met my wife there, which is great, and thankfully I have two somewhat crazy kids because of that role. But I think more importantly, it really exposed me to a tremendous number of different businesses. So Sterling was really funky, did everything in the commercial lending side. So I got the chance to be deeply involved in both traditional mortgage to retail banking, and then really funky types of commercial lending. So the ABLs of the world, the factoring, payroll finance, and then in 2013, Sterling got bought by Provident Bank, and I had the opportunity to lead that integration of the two banks and bring them together, which was super complex. And so we had to do a core conversion, which we took two banks on different cores and brought them to a third core, which is pretty crazy in hindsight. And
Yeah.
then, and then, once that 2013, that journey kicked off, uh, Sterling was really in rapid expansion mode. So from 2011 to 2018, when I left, we grew from about $1.5 billion to about 30 billion, 25, 30
Wow.
billion. Yeah. And
Huge.
so, and I was held a bunch of different roles in the technology side and corp dev and all sorts of funky stuff, did three or four major core conversions, a bunch of other specialty systems, and really, I think, learned the power and importance of delegation and building a team around you. And there's folks who were working on my teams then who I still talk to regularly today. And I think one of the most
Nice.
rewarding things you realize is that, and I think you kind of, in hindsight, you realize even more clearly, right? Your legacy isn't the things you create; it's the people you help develop. And there's folks who I'm incredibly proud that they've probably become more successful than I am. And I've been able to help propel them on that journey. And so I think that was my time at Sterling. And then, you know, in 2018, I think I was done with Sterling. Sterling was done with me, and I got the opportunity to take a role at Cross River. And I
Yeah.
didn't really know it, but I was always fascinated by fintech. And a friend of mine was like, "Oh, you should go talk to Cross River. They're pretty interesting. You might really like them." And uh, I sat down with Mike Raff, who was the CIO, and Label Malamed, who was the CISO, and this crazy guy Uriel Ash, who was running a bunch of the development. When they were interviewing me, and they're like, "Oh, like we built this core banking platform, and we built these payments, and we did this, and we did that," and like very animated. And I was like, "Yeah, like I've been fed a line of whatever plenty of times." And so for me, the as my old mentor Rodney Whitwell would say, the proof in the pudding is in the eating. And so I asked them to give me access to the APIs before I joined. And
Okay.
they're like, "We don't really do this normally." And I was like, "All right, let me see it." And I don't know why they let me, but they did. And I looked at it, and I looked at the Cross River Core, this platform called COS, and I was just blown away. And I was like, "I have to work here." And
Oh.
I just was incredibly intrigued by the technology. I was always thought payments were important, but I was like kind of tangentially exposed to them. And I worked for a traditional commercial bank, so we did wires and ACH. We didn't do anything funky, right? And these guys exposed wires via API and ACH via API and push to card. They were like one of the first large implementers of push to card, using it to enable funds flow to Lyft drivers and Uber drivers and like all sorts of crazy. And then they had this whole like MPL business, which I didn't really understand, which now is like we know Affirm and buy now pay later are common terms, but like in 2019 it really wasn't. And they were like
Yeah.
on the vanguard of that. And so I took a pretty decent pay cut to start there, and I was like, all right, like let's do it. I wanted to be in something that was deeply challenging and I think made me uncomfortable. At the same time, doing that, I ended up starting my MBA at MIT. And so like in 2019 was probably my year of change. And it really
Yeah.
went from in the beginning of the year, I had this very stable, very, like okay job, right? That I did interesting things, but it was part of a much larger, bureaucracy. And to by September of 2019, I was working for this fintech bank that was doing all of these funky things and starting at MIT, doing my MBA on the weekends, and like
Oh
you
my
talk
God.
about like night and day, and at the same time, I my
Yeah.
second child and in late mid 2018. So I had a 1-year-old running around along with my
Yeah.
5-year-old. And so life was pretty crazy. And so, but it was interesting, right? And I was working on
Yeah.
really fascinating things. And the first big thing that Michael Raff, the CIO, sat me down and said is like, hey, we've been talking about getting on this real-time payments network that the clearinghouse is doing for a while. Can you
Yeah.
just figure it out? And I was like, sure, right? Like I don't I'll do that, right? And so I call up,
That must have been overwhelming. Yeah.
yeah. Well, I mean, like I tend to put myself in situations that, you know, I think I used to have a poster on my wall, right? The Winston Churchill quote, if you're going through hell, keep going. And so like, I think that I
Bring it
thrive
on.
in those, yeah, I thrive in those situations where it's like, you're overwhelmed in the moment, but in retrospect, right, you look at it and, you say, wow, look at what I did. And like, I truly believe, your
Yeah.
darkest days make your brightest memories. And so I,
Yeah.
I, uh, I took all of that on, and there was this great guy, Matt Brosda, who sat next to me, and he was like, "Oh, I'm really interested in payments," and I was like, "Oh boy, do I got a job for you?" And you know, he and I, and then a team of others, along with a bunch of really brilliant programmers, went and got from like Michael's conversation with me and probably early July that we were live sending payments on the clearinghouse network by November of that year. And
Hmm.
so, it's kind of underscores the value of having, great technology, great BAs, really good product people, and then, not being encumbered by some legacy tech. And, we went live on, in the time it takes most people to approve a vendor, right? And, you know, it was fascinating, and, it was a tremendous experience. Um, and so 2020 rolls around, and then everybody knows what happens, right? And I had this fascinating life. We're doing all these interesting things, and then the pandemic happened, and you
Yeah.
tried to figure out like, what do you do, right? And it was it was really humbling because one of the things that's important to me is that my older son was born with a you know early and with a birth defect that really affected his breathing. And so
Oh my, I'm
the
sorry to hear that.
doctors
Yeah.
the pulmonologist told us at the time, like, hey, he's gonna be okay, but like COVID could be really bad news for him. And so we were, you know, really conscientious of like, well, what do you do now, right? And you throw yourself back to March of 2020, and it was just a big unknown, right? And
Hmm.
so I remember the coming back and my wife and I sitting and talking about it. And then I I have like seminal memories, right? I think that everyone does, like these flashbacks of like March of 2020, and like you like get a little shudder when you think about it. But like I remember I was walking back from like the Dunkin' Donuts by my house because that was the only thing you could do. Like I could walk to Dunkin' Donuts, right, and wear a mask. And
Yeah.
so I was walking back from Dunkin' Donuts with my cup of coffee, right, getting ready to figure out what to do. And I was somehow reading or listening to the CARES Act or something like that, that Congress had just passed, and reading about the PPP program. And like, I had just this light bulb go off in my head, like, hey, CrossRiver has all of the tech to do this, right? We had these awesome payment rails. We had these great partnerships. We had, this really scalable lending platform. Why couldn't we just do this and like try to figure out how to really help, right? And we already had a very
Hmm.
partnership driven culture. And so I called up Gilles, the CEO, and I was like, hey, I really think we could do this, right? And he's like, okay, like,
Mm-hmm.
let's see. And I remember we got on a call and it was like this, I think everybody in banking did like, oh, this PPP thing, should we do it? And I'd say a bunch of the people in the bank were like, no, or like, we should just do it this way. And,
Mm-hmm.
whether it came to me or a couple of the people, I was like, no, I think we should do it big, right? Let's just go for as much as we can. Like our job, I think in a situation like that, your job is not to figure out the minimum amount you can do. It's to look for how you can be maximal and how you could be, of your greatest impact. And so that like led the story of like the next 18 months of my life were all about PPP. And, we did a lot of things right. We did a lot of things, we probably could have done better. But when the dust settled, Cross River was the second largest originator of PPP loans for this tiny little bank with, a couple hundred people in New Jersey. And we originated over 550,000 loans across the two programs. And, I think that the part about it that was so seminal was how many people, you got calls and emails like on a daily basis, right? Of people thanking you because there were
Yeah.
so many times that, they couldn't get help from the larger banks because they were overwhelmed helping, millions of
Yeah.
clients, right? And we were able to take the technology along with partnerships and really figure out how to help a ton of people. And I think it really kind of lit this bug in me to say, you know, it maybe connected this thing that Gilles, the CEO, always says, right? And I think Cross River now changed their logo to like do good, right? But he would always end
Mm-hmm.
our meetings by saying our job is to do well by doing good, right? And like it's not just about profit, it's about impact. And the PPP program really connected me with that. It was work really hard, but you know, do things that mean something. And so when PPP wrapped up, I took another role in Cross River, and I was Gilles' chief of staff and ran a chief of staff office for him, really focusing on strategic projects. And I kind of still got that feeling of like, hey, how do I leave an impact? And I know that when we talked earlier, I told you about, I joke about my failed startup, right? But when
Yes. Yes. Yeah. You told
I
me.
graduated MIT, and you know, there's a
And you
wall.
had the startup bug, right? As
Yeah,
soon
you
as
have
you
the
finish
startup
your
bug,
MBA
and I
again.
think more so like if you look at Sloan School of Business, right, the management school, there's a wall, and it says, essentially much more well articulated, but like your education is a burden for you to do something great with, right, and to leave an impact.
Mm-hmm.
And I just really felt like there was something that I could do, and I was trying to figure out what that was. And so I got approached in 2022 by to work on a startup called Home Founder, and it
Okay.
was an idea that was, I think, really interesting, which is how do you solve or at least help ease the burden of home ownership for kind of
Ownership.
millennial and Gen Z folks, right? And the easy the answer is it's not easy, right? And the solution that the person who I ultimately ended up working on it with, this guy Andrew Rubin, who's a brilliant developer down in Maryland, is essentially, can you hack all the different components to create value across all the different stakeholders? And so
Mm-hmm.
we we came up with this really interesting, or he kind of started with this nugget and this thesis, and based on my background in banking and mortgages and his background in real estate development, we realized that if you can the principal problem for us that we were solving was not the price of the home. It was, if you deconstruct the problem of home ownership, there's a couple different gates, right? Maybe you could afford the monthly payment, which is, pretty wide swath, especially of folks who are paying quite a bit to rent. It's, if you're paying two, three, $4,000 a month to rent, how can you save up 40, 50, 60, $70,000 for a down payment? And so you
Yeah.
could qualify, but you couldn't buy. And so we ultimately came up with this really interesting way to make the financial system work and create value for builders, where we accelerated their IRR, value for banks, where we created low cost deposits, and value for the home buyer, because they could get into a $400,000 new construction home with about 2% down in a conventional mortgage, and when the home closed, they'd have about 10% equity the day they closed. And so it was this fascinating system. And I think as time is great, right? Because it allows you to reflect and realize that who you are in the moment versus how you see yourself moments after, get clearer and clearer as time passes, right? And so I think in the moment, I was so fixated on the idea, and I was so fixated on the destination, right? That I didn't necessarily focus as deeply as I should have on the people who were around me who were helping me do it. And I think that while we had a great idea that I think today would work, I think tomorrow would work, I think that not being able to bring people along for that journey and get them to believe in the idea as much as you believed in it, and candidly, especially when they're funding your company, you damn well better make sure that they're as passionate about it as you are. And I think that I was so technically in it that I could have told the story better, right? And so in the end of 2022, it just wasn't working out. And so I had left this great job at Cross River, to go do this startup, and it closed. We shut it down. And I was like, well, what do I do? Right. And you look at the crossroads, it's like, I called up Sam Sadhu, who's the CEO of Customers Bank. And I was like, hey, I've known him for a while. I was like, hey man, you got anything going on? And he's like, well, what do you want to do? And so I was like, I don't know, man. What do you got going on? And so we went back and forth a little bit. And, I think what I appreciate about Sam and Jay, who's the chairman, are that they're incredibly ambitious, right? And while Cross River wowed me with the technical capabilities and like the fact that they were sitting on this diamond in the rough, and you just had to figure out how to, kind of, find the right facets and kind of carve them out. Customers had this incredible entrepreneurial ambition, and they said, we want to do payments, we want to do APIs, we want to do, marketplace lending, figure out how we can work with digital assets, like all of it, right? In January. And I remember I was sitting down with them, and they're like, yeah, and I think that we may want to think about evaluating our core. So we think we can build a brand new core in about 6 months. And I was like, you're out of your minds, right? And I think that one of my strengths and weaknesses is sometimes I don't know how to shut my mouth and just say, okay, right? And so I told them like, yeah, that's not going to work, right? And we reset expectations a little bit, and I started, and my job right now is ultimately all of those things, right? I'm in charge of our direct bank, which includes third-party partnerships. I'm in charge of our consumer lending, so really more partnership-based indirect consumer lending, with like Upstart and Proceed Finance, and a bunch of other folks who we both originate and purchase paper from. I'm working with both some of our internal development as well as Finsley to build a next generation payment hub with connectivity to FedNow and RTP. Own our marketing and branding and sponsorships and all sorts of other fun stuff. And like that's where I am now is incredibly interesting, because you have this deep entrepreneurial spirit, the ability to really say like, how do we make a difference? How do we do things that are really going to leave a mark on the industry and enable our commercial clients? And, candidly, a balance sheet, right? And I think that at Cross River, there was so much we could do, but like we were constrained that we had to stay below 10 billion because of Durbin and like, a bunch of other structural constraints. At customers, we really have unlocked the balance sheet to open up opportunities for our payments clients, for our lending clients. And, I have more and more interesting and provocative conversations every day. I just got back from lunch with, one of them, and customers are just, I think they're desperate for a bank to think like a fintech and to help really engage and understand the problem and not wait for some perfect solution, but to work with them collaboratively and help define a staged rollout, help say, like 80% of something is better than 100% of nothing, right? And being honest and transparent about that and the roadmap. And so we have interesting stuff that we've done. We've written about, probably a couple $1 billion of paper. We signed a huge deal with Proceed Finance, who are fantastic, MPL originator out in Nebraska. And we're getting ready to launch instant payments, either late Q4, early Q1, depending on if it's my opinion or our PM's opinion, and, just exploring.
I wanted to ask you about this. I wanted to ask you about the customers bank, right? You said that these are not mom and pop customers; these are businesses, right? That's your customers,
commercial clients,
commercial clients. Okay, all right. And so when you said that you have all these different initiatives going on, the RTP, the instant payments, payment hub, and so on and so forth. So these are all, technologically advanced concepts, right? Do you work with partners to help you out with this? How do you deal with that?
You have to, right? So I think that there's a great, I don't know how familiar you are with like the sin of hubris, right? But like, we all think we can. And our job as leaders is to figure out how we do, right? And that ultimately, I think you can build anything. You can do anything. But we're measured on the velocity at which we deliver and we execute. And that partners, especially ones that you're thoughtfully aligned with, create velocity and acceleration that you simply couldn't do yourself or are, cost prohibitive. Look at the landscape of the products and the programs I laid out to you. If we didn't have fantastic tech partners, both on the development side, on, Finzly on the payment hub side, we work with folks like Ninth Wave and DocFox and, all sorts of interesting things to help augment and deliver great solutions, and then we add value on top of them. And so where I'm passionate about is like the customer touch points I need to own, right? So like I'll wrap our APIs in my gateway and I'll work with Finzly on wrapping our wire at endpoint or our ACH endpoint or FedNow endpoint. We're putting in a custom ledgering solution, and that will be wrapped within our own endpoint, because one of the hardest lessons that I've learned when I was going through all of the core conversions at Sterling is that if you can leave the customer unaffected or largely unaffected, you can be transformational behind them. And so if every time you need to make a change to improve your infrastructure, if you need to make a change to improve your products, you need to force your customers into a change, it's going to slow you down exponentially. And no matter what, the bar you're being measured against is 100% perfect. 99% doesn't get you anything. And so the way that you do that is you figure out what your customer surface is, add enough control and abstraction from it, and then work with partners behind them to create that velocity to build in the best-in-class solutions and give yourself the flexibility so that, you can deliver change that's meaningful and impactful without being disruptive. And it's an art as much as a science, but it's something that if you're not honest and transparent with your partners about doing that and like your mentality, you'll never be successful, right? Because the best thing you can do is just be honest about why it matters to you. Just like
Yeah.
if you were your customer, you'd want to do the same thing for them and protect them from whatever change was happening while you still transformed and deliver them better and better experiences.
So you talked about your passion for enabling access to payments, right? That payments and funds for the people who don't have the same opportunities.
Sure.
On that front, what are you trying to do something that's different?
So I think that in the current regulatory, structural environment, I don't want to say that I think that we're exploring a lot of interesting things. But we have to be pragmatic and thoughtful in terms of how we bring them to market and how we validate them. And so the stuff that we're really thinking about at customers is if you're a business, one of your biggest challenges is usually cash flow and availability of funds. Yeah. And so when you look at what's happening with instant payments, whether it's FedNow or TCH, those are really going to unlock a lot of use cases for folks, whether it's receiving funds in, sending funds out. You think like, well, how can sending funds out improve my cash flow? Well, if you can sit on funds for 3 days later because you don't need to worry about the delivery of an ACH on a Monday that you have to send on a Friday, right? All of a sudden, you significantly improved your cash flow. You picked up 3 extra days of flow. And so enabling people to think about the problem in a different way and then offer them the integration points to the payment rails, as well as educating our sales folks who go out and our client touch points to unlock these stories and understand how to pull the thread, and then to build a team on my end between product and client support that can support the field. And they don't need to know everything. They need to know how to open the door. And then my team comes behind and partners with them to figure out how we create meaningful value for that client. And so there's so much that is on the horizon. I think that one of the things that I fundamentally believe is that some of the paradigms that exist today, whether it's, primarily the card networks, I'd be very surprised if they exist in that form 5 to 7 years from now. There's the value creation that they initially had, I think is very different today. And right now, they're really there because of the network effect. And, you have the merchants who have the POSs and you have the consumers who have the card, and then, the network really eases it. But I'm not sure that's a deep enough moat to prevent some meaningful transformation. And when you look at with faster payments, the opportunities it opens up for settlement, as well as the cost delta, if you can think about, and I think, what you were alluding to is some of the ideas we've had about, can we do some of the sharing of the merchant interchange or the perceived merchant interchange back to the consumer to lower their overall cost? And like, there's stuff that we're in the design phases with on saying, how can we really rethink the point of sale model to create a better than cash experience with the ease of plastic? And it's definitely in the development and ideation stage, but both me and the person who works for me, who runs, our platform engineering, are equally, kind of passionate about this thing that card payments created meaningful value and de-risk settlement, in a different world. That paying 3.5% if you're a small business, for just something that, it's essentially a 3.5% tax that's, impacts every small business, and it's not necessarily fair. And I think that we need to think about ways that we could potentially structurally reform that really will likely revolve around access to faster payments and kind of combining that with things like the ISO 20022 standard.
Yeah. So the regulation, right? So let's talk a bit about the regulation. So there's all these formats that I think ISO 8583 was there, and then now it's 20022. Do you think that U.S. banks are going to latch on to that? Because from my experience, the European banks are bit more regulated compared to U.S. banks. And I hear that U.S. banks are just fine paying fines if if they don't have to if they don't have to adhere to this regulation. So when is that going to happen? And what are the levers to pull to make the banks adhere to regulation a bit more?
So, I had a very similar question to the folks I was at lunch with today. It was a very large kind of payment, not provider, but kind of intermediary. And they were like, what is going to be the impact of regulation? How do we get everyone to move faster, right? And I think the way that I look at it is the way that I look at most things in life, which is that in order to get someone to do something, there has to be a value trade, right?
Mm-hmm. Yep.
In order for, for me to pay, me to want to pay whatever for a lunch or a dinner, right? The food should be good, right? If it's not, I'm not going to go back there again, right? And so, I think that right now, the value trade that we have that you alluded to is, all right, well, you do this and you don't get in trouble, right?
Mm-hmm.
And,
mm-hmm.
If you don't do it, maybe you'll get in a little trouble, you'll get yelled at, and some banks are willing to accept that risk, right? I think that's really a diminishing value trade because you shouldn't do something or not do something because of a regulatory regime.
Mm-hmm.
Should do something or not do something because you're creating sufficient value to offset the cost and you're creating value arbitrage. Yeah. And so the difference is that when consumers expect or small businesses expect X, Y, or Z, you're going to end up getting, value arbitrage where you'll lose business or you'll lose opportunities to folks who have that capability. And I think that the US has always been very free market oriented versus,
mm-hmm.
the European market is certainly more prescriptive. And that I think if you look at the challenges that we've had with payments right now, it's that, RTP was implemented by a consortium of banks. It was implemented in a way that made a lot of sense in a low zero rate cost environment. But with Fed funds at 5.5 and you getting zero value out of it from parking it at Fed to offer liquidity, like you need to now price in the liquidity cost into your payment exchange, right? With your Fed now working on your Fed master account, essentially you're getting Fed funds on whatever you're using, as well as it's running off the same rails effectively as your, Fed wire and ACH. And so I think what'll end up happening is that the barriers to entry that kept a lot of smaller banks off will become lower, and that you'll end up having people realize very quickly that a FedNow payment effectively has the exact same UCC coverage as a wire. And so why do commercial clients send wires? Well, because they're guaranteed good funds. And from the UCC, they're considered final payments. And so when I was running a mortgage warehouse business, my old boss made me read every piece of case law on how banks lost money in mortgage warehouse businesses, which was a really fun exercise. But one thing I did learn is usually it's because they didn't perfect the final payment, right? And they didn't perfect the UCC. And so the reason why you send a wire is because it kind of eases a lot of that burden in most cases. That the Fed made a FedNow payment have the same effective coverage as a wire. And so a wire may cost a bank $1, but they sell it for 10, right?
Sure.
A FedNow payment is published cost of 4.5 cents. Are you going to be able to charge $10 for something that has a 4.5 cents published cost? And candidly, when your competitor down the street says, hey, I can give you a FedNow payment, which is effectively the same thing as a wire for a fraction of the cost of that wire that you're currently paying Bank X, why don't you come move your funds to me? Someone's going to say yes all day, right? And so I think what's going to end up happening is there's going to be greater awareness of the kind of the competitive disruption that an instant payment offers relative to the legacy payments that banks have, which is going to end up driving mass adoption of this, coupled with the Fed saying you need to support ISO 222 on FedWire going into 2025, and like all these things are going to culminate where you're going to have this avalanche of transformation it'll be obvious in retrospect, but I'd be very surprised if by 2026 you don't have half of the banks in the US on a faster payment network and 90% of the dollars flowing over a faster, have availability to a faster payment network, and I think that the fact that there's going to be just so much fee revenue lost by, cost arbitrage from competitive advantage, that it's going to move a lot of people to adopt it and kind of get comfortable with being uncomfortable.
Get comfortable being uncomfortable. That's a nice catchphrase there.
You can have it.
I'm going to take it. I'm going to write it down. Over the course of our conversation, you briefly touched upon the payment hub. Now, there are payment hubs available, and there are people who build their own payment hubs and all that. So, as a CIO, you have to make the decision about build versus buy, and the maintenance side of it, and whatever is needed to make a decision. So can you take the example of Payment Hub and tell us about the build versus buy, methodology that you operate on?
Yeah. And so first of all, I'm not CIO. We have a great CIO, Nick Harris, who's brilliant, right? So I work closely with him, and I manage the product and kind of we have kind of like an interesting relationship and dynamic where I kind of like own the product and kind of tech implementation of a bunch of it. And he and I work very closely on defining a bunch of this stuff. And like, as we thought about that aspect of it, and, he recently joined, but, his predecessor had very similar conversations with, it's how do we think about being transformative without it being too far away for someone to see it, to kind of attach value to it. And so when you talk about implementing a payment hub, you could build it yourself like Cross River did, but, set aside, $5 to $10 million because, and realize it's going to be relatively painful. I think that the best option for a lot of kind of mid-sized banks and below is to say, well, how do I get a lot of the transformative momentum through my organization through partnership, but also control enough of my fate? And so that's why we really looked at this and said, we challenged our partner who's implementing this, Finsley, to say we want to have access to the faster payment networks, and we're doing it in a fairly unique way that we're standing up a whole new ABA for it. And so we tried to say, like, what's the way that we can show people that we can do this, that we can go to clients and offer them the ability to send faster payments without having to wait until we do the entire payment hub enterprise transformation to all of our endpoints and refactor all of our legacy client integrations. And the answer was like, well, let's build our own edge gateway, which we're doing right now. That will ultimately be how clients access all of this. Let's wrap our core into an abstracted ledger or fabric. And like, my team gets mad at me every time I talk about this because I can geek out on it all day because I think it's fascinating. But like, ultimately, how do we provide a surface for our accounts, right? That's above the core. And then we expose all of this on a new ABA number so that we ultimately protect our existing accounts. And so we're going and we're standing up FedNow and RTP on a brand new ABA that has zero traffic on it, zero accounts on it. And so when a client says, hey, I want to use your APIs to send out, FedNow payments, great. We do an internal transfer from their existing account to their new account on the new ABA, and then initiate the payment from that. And so now all of a sudden, I've offered this functionality. I get the organization to start to think about all of the compliance and the regulatory and the AML and the BSA and the OFAC and all the other acronyms, right, that we have to worry about. And we still have to solve those, but we solve them in a much more containerized way, right? We don't have to think about it across every possible use case across the entire organization, which we will need to do over the next, 18 months as we do the entire Payment Hub project. But we get people to understand that we can deliver change in meaningful ways that aren't, overwhelming. And so, I want to really thank, kind of the team at Finsley, Chris and Prashant and the rest of the folks there for, candidly listening to myself and my payments lead, Dan Devine, and his team when we challenged them on, we need to figure out how we get people to believe that this is real. And they came up with the solution in collaboration with us. And, we're really excited about it because we think not only for us, but it presents a great blueprint for other banks, right? Why, if you wanted to go into your highest value customers, which are usually commercial, and say to them, hey, I want to offer you this functionality in a very tech forward way, you now can do that. And it doesn't have to, it's not a or conversation, it's an and conversation. It's, I'm going to start you with this. And then over the next 12 months, right, we're going to backfill it into all of our legacy channels, but you figure out how it works for your business today. And then as you figure it out, right, we're going to add more and more capabilities versus waiting for this perfect moment when we're ready for you. And at that point, you've been waiting for us to be ready. And you've probably talked to somebody else who is helping you along that journey. And so for us, it's about really showing and demonstrating to the organization that a payment hub in partnership with someone who is innovative and forward thinking doesn't have to be a big bang and can deliver meaningful return to your clients and to your bank in short order, while still giving you the optionality and the transformation that, it will deliver across the entire spectrum of our products.
Got it. Cool. I think we've had a pretty fascinating conversation. Thanks for going through your experience as well as your ideas about the value creation. Right, that really stuck out to me as as a mantra. Right, for anything that you do, the value creation is a lot more important. And not only that, being able to articulate the value, that's an asset as well. So
I'd love to take credit for it, but Bill Ellett, who runs the kind of the disciplined entrepreneurship at MIT, that his class was very overwhelming, and I don't remember much from it, right? But I definitely remember that when you're doing something, and I think if you go back to the startup that I worked on, right, that if I wasn't able to articulate that effectively, that's on me. And so I think that when you think about a new idea, you think about being transformative for your organization or even for yourself, right? It's about the value trade, but you need to be able to get people to understand it, and they need to feel the value you're returning back to them. Otherwise, it's a waste. And I think that it's a great way to frame, both business decisions and life decisions, because it makes it very obvious, and it creates accountability on you to make sure that it's not just a good idea, but it's a recognized one.
Absolutely, yeah. Professionally, yes, and on a personal front, and if you're speaking about value to your kids, I think they're going to shut you out. I'm like, okay.
I know. I keep the value. One day.
Because they don't understand this language, but I'm pretty sure you're going to translate the value to dumb it down to the language that they would understand.
I'm pretty sure it's about trading chicken nuggets or Roblox. So
there's a transaction going on there as well, right?
100%.
All right. Thank you, Jesse.
No problem.
Thanks for your time.
It was good chatting.
The conversation.
Take care.
All right.
Bye-bye.
Take care. Bye-bye.